Namaste, good morning. We walk into the third head of income. Basically, income is classified into five heads. Income is classified into five heads: salaries, house property, business or profession, capital gains, other sources. In this, we are walking into the third head of income now. We are walking into the third head of income now. The heading of this chapter, the heading of this chapter is profits and gains of business or profession. Okay, the heading of this chapter is profits and gains of business or profession. My dear friends, this is the highest income yielding chapter for income tax law. Number of taxpayers more is salaries. Number of the collection, the monetary collection is more under, because all companies, be it the biggest companies like Reliance, like TCS, like Infosys, to the kirana wala, the shopkeepers which you see outside your house, everybody fall under this category. Everybody is falling under this particular category. That is, from a large corporations to a small vendor, a street vendor, they all fall under this particular category of business or profession. It also includes all professionals, doctors, lawyers, chartered accountants, chartered secretaries, company secretaries, engineers. It includes all media personalities. It includes all performers. So the heading covers huge number of people. The heading covers huge number of people. The largest collection is going to come from this heading, section 28 to 44. Section 28 to 44 is the coverage of this particular provision, of this particular section. Profits and gains of business or profession. Everything is going to be covered. Wherever we are going to prepare a trading P&L account, those will fall under PGBP. Okay, trading P&L account or receipts and payment account, whatever these, to whoever assessees we are going to prepare, they are all falling under this category of PGBP, profits and gains of business or profession. Slowly but surely, okay, we'll walk into the section first by understanding these four terms. What is profit? What is gain? What is business? What is profession? Okay, so we will understand these terms. Okay, profit, okay, is the surplus arising from regular course of activity. Okay, profit is the surplus arising from my recurring activity, my regular course of activity, whatever surplus I get from my regular course of activity, recurring activity, I call it as profit. For example, sale of stock, we call it as profit because it is recurring to me. It appears, it comes to me every time. Okay, gain, okay, is the surplus arising from isolated activity. nothing but one-time activity, very rare occurrence. Very rare occurrence. We call it as sale of assets. Though this is not taxable in this chapter, but I'm generally saying the term gain means which is not regular in nature, which is not recurring in nature, which is isolated or rare form of activity. Which is isolated or rare form of activity is known as gain. Profit, gain, business, business, any trade, commerce or manufacture slash any activity or concern in the nature of trade, commerce or manufacture. What is business? Any trade, commerce or manufacture, any activity or concern in the nature of trade, commerce or manufacture. Any trade, commerce or manufacture. Trade means buying and selling. Manufacture means conversion of raw material into finished product. Commerce means allied activities like banking, transportation, like that. Any trade, commerce or manufacture is known as business. It can be manufacture, conversion of raw material into finished product. It can be just mere buying and selling of goods, or it can be all the service sector activities like banking, transportation, chartered accountancy, cost accountancy, engineers, doctors, lawyers, all will fall under commerce. Is a big basket. Any trade, commerce or manufacture. Sometimes I wanted to do, please understand, I wanted to do business. I started. The first lot of sales itself, I incurred a huge loss. The first lot of sales itself, I incurred a huge loss. So I closed down. So it is not a regular course of activity. But the law says any activity or concern in the nature of, it is speaking about your intention. Whether you have the intention to do business, it speaks about intention. If you have the intention, the motive, the interest to do business, but you did not continue, also I will call it as business. If you had the intention, any activity or concern in the nature of, you had the interest, you have the intention, you had the motive of continuing it, but you dropped down. Any activity or concern in the nature of trade, commerce or manufacture is also known as business. Profession. Profession. What is this profession? Okay. Knowledge acquired through formal system of education or income earned through exhibition of skill. What is profession? Profession means knowledge acquired through formal system of education. Doctor, lawyer, CA, formal system of education, or income earned through exhibition of skill. We all know that Ilayaraja has not gone through any musical schools, but he is the definition of music. We know SPB has not learnt formal Carnatic music or any form of music for that, but he is the definition of voice modulation and voice clarity or word clarity. Okay, and obviously the next example you can guess. We all know that nobody taught தலைவர் how to do a style, but he is the definition of everything. Okay, so profit, gains, business, profession are all taxable in this chapter. Okay, profits and gains of business or profession, that is what is the heading of this chapter, and these are all the four terms for us to understand. Section 28, basis of charge. Section 28, basis of charge, my dear friends. Section 28, basis of charge. The following incomes are taxable under this section. You can even say it's under this chapter. Profits and gains of business or profession carried on during the previous year. Okay, the following incomes are taxable under this chapter or under this section. The first is whatever we already saw, profit and gains of business or profession which we carry on during the previous year. Compensation received for termination of a contract, modification of terms of agreement. Compensation received for termination of contract. Sir, we appoint an agent. Please understand, we appoint an agent. Okay? We appoint an agent for a particular area. We say Chennai so and so is the agency. The company wants to directly distribute the product in Chennai. So they cancel, they terminate the agency and they say that I understand that suddenly I am terminating you. So I will pay you compensation. For the company, it is an expenditure. For the agent, it is an income. He is not going to receive compensation regular basis. But we also saw gain is also part of this chapter, even if it is one time isolated. So, any compensation received for termination of a contract. Sir, I enter into an agreement. I enter into an agreement with a person that every year, every month, I will supply 1,000 units of a material. Every month, 1,000 units of material I will supply. If it falls short, if I am unable to supply the required units, I will compensate. So in a month I was unable to do 1,000 units. I only supplied to him some 700, 800 units. For the remaining unsupplied unit, I compensated. I paid compensation. For me, it is an expenditure. For the recipient, it is an income. Any compensation received for termination of contract or modification of terms of contract. Export incentives like duty drawback, cash compensatory support, etc. Okay. If you export goods or services, what you are getting is for the country as a whole, you are getting foreign exchange, foreign money, because that person will pay you in dollars. So foreign money flows into our country. So whenever we export, we get some incentives. The government provides some incentives if you export. The incentives are in the form of duty drawback. Whatever duty you paid, I will give it to you back, or in the form of cash compensatory support. So these are also regarded as business income. These are also regarded as business income. Income from specific services performed to members. Okay, the best example is ICAI. Okay, the best example. So, chartered accountant, for we all, that is, we the members of the institute, pay fees to the institute. We pay fees. Apart from students paying fees, we also pay annual fees to the institute. Generally, that fees, okay, is an income, because income from specific services performed to members. Income from, it is services performed by the institute to members. But still, specific services performed to members. Perquisites payable under business or profession. You will wonder what can be the perquisite under business or profession. Okay, for an agent, gold coin is provided for achieving target. Okay, for the agent, the company provides gold coin. For the agent, the company provides gold coin for achieving some target. For the agent, the company provides gold coin for achieving some target. Please understand, for the company it's an expenditure because they bought the gold coin and gave. For the agent, whatever is the fair market, nama salary la padipom gift. Okay, whatever is the fair market value of this particular gold coin is treated as income. Is treated as income. Remuneration or interest on capital paid to partners by a firm. I'll come to this in some other chapter. As of now, you have written. I will come to this in some other chapter. Don't worry. Non-compete fees. Okay. Non-compete fees is an income. What is non-compete fees? Sir, suppose there is a government tender. There is a tender, either government tender or private tender, etc. Me and Ramkumar, both of us quote for the tender. Both of us are eligible to quote, or we are quoting. I approach Ramkumar and say, let us not fight between us. Let us not compete between us. You withdraw your tender, I will pay you a particular sum of money. You withdraw your tender, I will pay you a particular sum of money. Non-compete, if you don't compete, I will provide you some consideration. If you don't compete, I will provide you some consideration. It is an expenditure for me and an income for Ramkumar. So, non-compete fees is an income. Subsidy for non-depreciable asset and general subsidy. Okay, subsidy for non-depreciable asset and general subsidy. Subsidy for non-depreciable asset. Here I want you to be very clear about this part. Okay, subsidy for a depreciable asset should be reduced from the cost of asset. Subsidy for a depreciable asset. For constructing a building, the government gives subsidy. I should reduce it from the cost of building. For buying a plant and machinery, subsidy is provided. I should reduce it from the cost of the asset. Subsidy for a depreciable asset should be reduced from the cost of the asset. General subsidy and subsidy for non-depreciable asset should be treated as income. General subsidy and subsidy for non-depreciable asset. If I get it for land, it is an income. If I get it for land, it is an income. AS 12, you would have studied government grant. I believe it's in group 1, right? Is AS 12 in group 1?
Yes, sir.
Yes, sir.
You would have studied AS 12, government grant. AS 12, what it is saying? Reduce it from the cost of the asset or treat it as a liability. Reduce it from the cost of the asset or treat it as liability, proportionately distribute. Even if it is for land, there is no distinction. If it is a general subsidy, if you start an industry in a backward area, government will provide 1 crore. If it is a general subsidy, take it to capital reserve. Don't distribute it as dividend. Take it to capital reserve. That is what in a crux AS 12 is saying. On a income tax law differs. Income tax law differs, my dear friends. If it is for a depreciable asset, be it building, plant and machinery, like AS 12, reduce it from the cost of the other option is not at all there. Liability, reduce it from cost of asset. If it is for a non-depreciable asset, that is, it is for land, or if you start industry in a backward area, they provide subsidy. Whatever general subsidy or for non-depreciable asset you get, it should be treated as income. It should be treated as income and it cannot be reduced from, which is very different from how the accounting treats it. Here the treatment is very different. Okay. So what are all the things which are specified as income? Generally PGBP. Compensation is an income. Non-compete fees is an income. Export incentives are income. Perquisites which are provided are income. Okay. Partners remuneration is an income and subsidy is an income. These are considered as income under PGBP. Section 29. Mode of computation of taxable income. Mode of computation of what is taxable under this chapter. Mode of computation of taxable income. Taxable business income is equal to taxable business income is equal to revenue minus allowable expenditure. Number P&L account by GP to expenses to net profit. That is what here also said, but in a very different style. Taxable business income is equal to revenue, whatever is the income, minus not just expenditure. It says allowable expenditure. Revenue minus allowable expenditure. Revenue minus the stress under income tax law is on the word allowable. The stress is on the word allowable expenditure. Revenue minus allowable expenditure. Allowable expenditure are classified into three. Allowable expenditures are classified into three, my dear friends. Allowable expenditure are classified into three. Expressly allowed by law. Expressly disallowed by law. Allowed only on the basis of actual payment. Allowable expenses, my dear friends, are classified into three. Expressly allowed by law, section 30 to 37. Expressly disallowed by law, section 40 and 40A. Allowed only on the basis of payment, section 43B. Expressly allowed by law, 30 to 37. Expressly disallowed by law, 40 and 40A. Allowed provided there is an actual payment, 43B. Allowable expenses are classified into three: expressly allowed, expressly disallowed, allowed only on the basis of actual payment. So you can see the major part of this chapter is not going to speak about income. It is only going to speak about expenditure. The major part of this chapter is not going to speak about income. It is only going to focus, target upon expenditure. That is the beauty of this chapter. The target is not about income. The target is about expenditure. That's why you can see close to 10 sections speak about expenditure. Actually, only 2 sections speaks about income. Apart from 28, there is another section called 41, which speaks about income. Okay, almost all the other part of this section only speaks about expenditure. We walk into the first level, expenses. expressly allowed by law. 30 to 37. We walk into the first level. Expenses expressly allowed by law, section 30 to 37. Section 30. Expenses in relation to building. Section 30. Expenses in relation to building. In case of a building, what are all will be allowed as deduction? Rent, current repairs, maintenance, rent, current repairs, maintenance, insurance, and taxes are allowed as deduction. In case of a building, what are all allowed as deduction? Rent. Current repairs means repairs which is not of capital nature. I paint the building, current repairs. I construct one more room, capital nature. I change the whole of the tiles, capital nature. Okay? So the wordings used is current repairs, maintenance, insurance, and taxes are allowed as deduction here, my dear friends. We wrote case 9. Property used for the purpose of own business or profession. This is not dealt with in this chapter. It is dealt with section 30 of the next chapter. So here it is said, if you have a building where you are carrying on business or profession, if you have taken it on rent, taken it for lease, claim rent also. Illaya, it's your own building. What are all you can claim? Current repairs, maintenance, insurance, municipal taxes, you can all claim it as a business expenditure. We can claim this as a business expenditure. That's why we wrote it there. It is not covered. Go to the next chapter. The next chapter will tell you how you can cover. Okay. Interestingly, what did I use? Taxes. I have not used the word taxes paid. House property less municipal taxes paid. Even if it is due, they are going to allow, because some other sections will take care, just for your understanding sake. Section 31. Expenses in relation to plant, machinery and furniture. Expenses in relation to plant, machinery and furniture. What are all can be allowed? Higher charges, current repairs, maintenance and insurance are allowed as deduction. Okay. With regard to plant, machinery and furniture, the allowable amounts are higher charges, current repairs, maintenance and insurance. These are allowed as deduction. These are only can be claimed as deduction. Section 32 hyphen depreciation. Section 32 hyphen depreciation. Please understand. Okay. This is the mother of all sections in income tax law. Okay. This is the lengthiest, deepest section under income tax law. We are going to study it for 3 hours. In final, we will study it for another 5-6 hours. It's a lengthy discussion about depreciation. And it starts with the same definition as like our accounts or any other law. Reduction in the value of assets due to usage, change in technology, or lapse of time. Okay. Reduction in the value of asset due to wear and tear, that is nothing but usage, obsolescence, that is nothing but change in technology, effluxion of time, which is nothing. This is the same definition like any other place where depreciation. But due to usage or other things, reduction in the value of assets due to usage, change in technology, or lapse of time is known as depreciation. Under income tax law, depreciation can be claimed only by the owner of the asset. Under income tax law, depreciation can be claimed only by the owner of the asset, whoever's name appear in the legal deed. We saw in the last class itself, ownership, that is the last chapter itself. Ownership is determined always on the basis of title deeds. Whoever name appear in the title deed is the legal owner, and he can only claim depreciation. In the case of lease transaction, okay, lessor, in the case of lease transaction, lessor can only claim the benefit of depreciation. Okay, in the case of lease transaction, the owner is lessor. Lessor can only claim the benefit of depreciation. In the case of hire purchase, okay, in the case of hire purchase, okay, the purchaser, not the vendor, my dear friends, the purchaser can claim the benefit of depreciation. In the case of hire purchase, the hire purchaser can claim the benefit of depreciation. In the case of hire purchase, the hire purchaser can claim the benefit of depreciation. So please understand, in the case of a lease transaction, only the lessor can claim, whereas in the case of hire purchase transaction, the hire purchaser can claim the benefit of depreciation. The hire purchaser can claim the benefit of depreciation. I hope the class is clear. Okay.
சார் ஆனா ஓனர்ஷிப் மாறி இருக்காது சார்.
எதுல?
டைட்டில் ஹையர் பர்ச்சேஸ்ல லாஸ்ட் இன்ஸ்டால்மென்ட் பே பண்ற வரைக்கும்
our friend is asking me whether in hire purchase, hire vendor is the owner, only on last installment it goes to hire purchaser. No friends, I want to make it clear, in hire purchaser, the hire purchaser is the owner. On non-payment of installment, the hire vendor will take back the goods. On non-payment of installment, the hire vendor will take back the goods. At that time only he will become, on repossession only, he will become the owner. Otherwise, the owner continues to be hire purchaser. Of course, I know in your accounts you claim depreciation and all, okay, for hire purchaser. Okay, that is one of the reason I don't even go into that chapter. Okay, that's not correct. Okay, so in the case of hire purchase, the purchaser can claim. So under income tax law, only the owner can claim. Lease means lessor. Hire purchase means the purchaser. Under income tax law, under income tax law, block of asset method needs to be followed. Under income tax law, my dear friends, for claim of depreciation, block of asset method should be followed. For claim of depreciation, my dear friends, block of asset method should be followed. Okay, this is something very unique, very interesting. Okay, block means group. Block means group. All assets of similar nature having same rate of depreciation will be grouped together, and depreciation will be claimed on group balance. Under income tax law, block of asset method should be followed for claim of depreciation. What is block of asset? Block means group. Assets of similar nature having same rate of depreciation will be grouped together, and on the group balance I will claim depreciation, and on the group balance only I will claim depreciation. My dear friends, I have a factory building in Surat, I have a factory building in Manipal, I have a factory building in Pondicherry. According to company law or general accepted accounting, factory 1, factory 2, factory 3, opening WDV, depreciation, closing WDV, like that they will put. According to income tax law, all the three put together is known as factory. Block of factories, group of factories, and I will claim depreciation only on group balance. Okay, factory is a small example. A company will have hundreds of cars, hundreds of vehicles, cars running. According to company law or accounting, how we do? Car 1, registration number, model, okay, other details like engine capacity, etc. Opening balance, depreciation, closing balance, like that we keep writing. Under income tax law, all the 100 cars put together are known as block of cars. I don't distinguish. I don't distinguish. All the 100 cars put together is known as block of car. Under income tax law, block of asset. Block means assets of similar nature. Ellame car da. Having same rate of depreciation for everything, same rate, will be grouped together, and on the group balance I will claim depreciation. Imagine a company like TCS, CTS, Infosys. They will have per employee, per 2 employees ஒரு லேப்டாப்னு வச்சா கூட ஒரு லேப்டாப் or one computer. Obviously it is per employee. They might have 60,000, 70,000 or 5 lakh computers. Under company law or under generally accepted accounting practice, computer 1, make, configuration, unique ID, that which is there for your Unicodes. Okay, unique ID, opening balance, depreciation, closing balance, like that you will maintain for 1 lakh line items. Under income tax law, all the 1 lakh computers put together is known as block of computers. So the advantage and disadvantage is I don't differentiate. I claim depreciation only on the group balance and not on individual assets. Under income tax law, block of asset method should be followed. Block means group. All assets of similar nature having same rate of depreciation will be grouped together, and on the group balance depreciation will be claimed. Okay, stay in your theory notebook. Format of claiming depreciation. Format of claiming depreciation. How to claim depreciation under this block of asset method. Particulars, amount, have the format, particulars, amount. Opening WDV of the block as on 1st April 2019. We are all due in 1920. Our financial year is 1920. So opening WDV of the block as on 1st April 2019. Additions, purchased and put to use for 180 days or more. Purchased and put to use for less than 180 days. Purchased and put to use for 180 days or more. Purchased and put to use for less than 180 days. Deletion. Sale consideration of any asset falling in that block. Sale consideration of any asset falling in that block. In the outer column within bracket. The answer now I get is known as balance available for depreciation. Balance available for depreciation. The balance that is there on which I can claim depreciation. Less depreciation. Closing WDV of the block as on 31st March 2020. This is the key factor answer for us. Okay, this is the format of claiming depreciation, opening WDV, additions divided into two, okay, less sale consideration. I will get the balance available for depreciation. Most important place for claiming the answer, that is the depreciation. The entire format is to claim the depreciation and closing W. Okay. The first note is a very simple note which we all know. Okay, the whole of first note. Okay, preceding year's closing balance will become the subsequent year's opening balance. Last year's closing balance, my dear friends, இப்போ closing balance as on 31st March 2020 will be the opening balance as on 1st April 2020 for the financial year 2021. So, closing balance as on 31st March 2019 should have become the opening. Preceding year's closing balance will become the subsequent year's or current year's opening balance. Assets newly acquired are bifurcated into put to use for less than 180 days and put to use for 180 days or more. Okay, assets which are purchased during the year are divided into two. Put to use for less than 180 days. The other one is put to use for 180 days or more. Okay, all assets purchased during the year are bifurcated on the basis of date of usage, and I am dividing it into two. Put to use for less than 180 days, more than 180 days. Reverse la take your time to understand. I am coming reverse. March 31 days. Feb 29 days. Okay. January 31 days. December 31 days. November 30 days. It comes to 152. I need 28 days from October. I need 28 days from October. In fact, 27 days. In fact, 27 days. Why I am taking this time is to explain you this point, to explain you this third point. If an asset which is purchased is put to use, if an asset which is purchased is put to use on or after 5th October 2019, then it is less than 180 days. If an asset which is purchased on or after 5th October 2019, okay, then it is less than 180 days. How I am saying this? 5th of October, now we will leave the first 4 days. 1, 2, 3, 4 we will leave. October has 31 days. So 27 plus November plus December plus January plus Feb because it's a leap year plus August, March. So exactly 179 days, less than 180. Colloquially, when we speak, we call it as first half, second half, September 30th. Up to September 30th, on or after, okay? But practically speaking, it exactly falls on 5th of October for 1920. If it is not a leap year, 4th of October. If it is a leap year, 5th of October. If it is not a leap year, 4th of October. Okay, so repeating, if an asset is purchased and put to use on or after 5th October, it falls under this second category of purchased and put to use for less than 180 days. Sir, why are you splitting it? You have not yet said this. I am coming to that point. Where an asset is purchased and put to use for 180 days or more, where an asset is purchased, and so if I purchase and put to use on or before October 4th, where an asset is purchased and put to use for 180 days of or more, whole of the eligible depreciation can be claimed. Where an asset is purchased and put to use for 180 days or more, whole of the eligible depreciation can be claimed. The entire depreciation can be claimed. Where an asset is purchased and put to use for less than 180 days, half of the eligible depreciation can only be claimed. Where an asset is purchased and put to use for less than 180 days, half of the eligible depreciation can only be claimed. Half of the eligible depreciation. friends. Where an asset is purchased and put to use for 180 days or more. My dear friends, let us assume that the rate of depreciation of asset is 10%. Where it is purchased and put to use for 180 days or more, that is on or before October 4th, you can claim full depreciation. Entire 10% you will claim. Entire 10% you will claim. Whereas if the asset is purchased and put to use October 5th onwards, after October 5th, okay, if you purchase and put, okay, you can only claim half, that is 5%. What is interesting in this? Income tax law does not recognize the concept of proportionate depreciation. I follow financial year. I purchased an asset on 1st of June. Company law, generally accepted accounting says asset value into rate into 10 by 12. I purchased the asset on 1st of September into 7 by 12. I purchased the asset on 1st of January 2020. Asset value into rate into 3 by 12. Income tax law, that is not there. Even if you purchase and put to use an asset on September 30th, take full 10%. Where an asset is purchased and used for 180 days or more, whole of the eligible depreciation into 6 by 12 kadayadu. No, you can claim fully. Even if you buy an asset and put to use on March 31st, last day of the year, March 31st, in all other laws, a value into rate into 1 by 365 or 366, they have to claim. Under income tax law, you can claim 5%, half of the eligible depreciation. So if you buy an asset in the first half, claim full depreciation. If you buy asset in the second half of the year, claim half. First 4 days of October, okay, I consider it as first half. So if you buy it in the first half, you can claim the whole of the depreciation even if you purchased it on September 30th. If you buy it in the second half, even if you have purchased and used it only for 1 day, March 31st, half of the eligible depreciation can be claimed. Biggest advantage of income tax law: no proportionate depreciation under income tax law. You need not proportionate, only 2 things, half or full. Biggest benefit, okay. So in the format, opening WDV, okay, now you know why I am dividing it into 2, additions into, and based upon put to use date, whether full depreciation or deletion. The entire sale consideration will be reduced from the block. The entire sale consideration will be reduced from the block value. Okay, the entire sale consideration. one more unique thing coming up. In income tax law, there is no concept called profit on sale or loss on sale. In income tax law, there is no concept called profit on sale of asset, loss on sale of asset. The entire sale consideration, I will reduce it from the block. The whole sale consideration, I will reduce it from the block. So there is no concept. Only if I have an asset value, if I sell it more than that, profit less than, I am reducing the whole sale consideration from the block. This means there is no concept of profit or loss on sale. Depreciation will be claimed on the balance available. After reducing sale consideration, whatever is the balance available, on that I will claim depreciation. Okay, under IT law, income tax law, depreciation can be claimed only on the basis of diminishing balance method. Okay, only diminishing balance method is recognized under income tax law. Only diminishing balance method. However, exception. Electricity companies can opt for straight line method. However, electricity companies alone can opt for straight line method. However, electricity companies alone can opt for straight line method. Depreciation needs to be claimed at the rates prescribed by law. Depreciation needs to be claimed at the rates prescribed by the law. So once you reduce depreciation, we will get the closing WD. Patiently read through once from the top. One minute, there is a small urgent call. I'll just speak to that and come back. So friends, this is the method of claiming depreciation. In examination, they will give you the depreciation rate. In examination, for every asset, they will give you the depreciation rate. Don't worry, but the popular rates I'm just giving you. Okay. Okay. Yeah, go ahead with your question.
So any asset which is sold will not depreciate that year.
We will never depreciate that. Thanks for that point. We will never depreciate an asset, whatever may be the date of sales. Only after reduction of that as a sale value, you will get the balance available for depreciation.
And you said there is no concept of profit or loss on sale.
Yes.
And there will be no gain also. No?
Please wait for some time. Building, the rate is 10%. Okay. Cars, 15%. Cars, 15%. Computers, 40%. Computers and accessories also like printers, scanners, etc. Machinery, 15%. 15%. Furniture, 10%. Intangibles like goodwill, patent, know-how, trademark, copyright, license is again 25%. 25%. General rate for many items that is only applicable for fans, ACs, okay, air conditioners, electrical appliances, surgical appliances, scientific appliances. For everything in income tax law, we call the general rate as 15%. In exam, they will give you, but have this, suppose in the question, if I have failed to type it, I will tell you what is the rate. But if you are working at home, you can refer to this. This is also there in the material also. Building 10%, cars 15%, computers and accessories, all these things are 40%, machinery 15%, furniture 10%, intangibles 25%, and there is a general rate of depreciation of 15%.
An asset which is purchased and not put to use cannot be claimed for depreciation.
No, you cannot claim depreciation. Unless the asset is used, you cannot claim for depreciation.
Okay.
To your practical notebook, chapter heading, Profits and Gains of Business or Profession. Under that, Roman 1, Working of Depreciation. To your practical notebook, chapter heading, Profits and Gains of Business or Profession. Under that, Roman 1, Claim of Depreciation. Claim of depreciation. I am there in question number 1, page number 112. And there in question number 1, page number 112. I will read the question first. Opening WDV of 3 missions, 28,40,000. Okay. Asset purchased. Okay. Asset purchased another mission in, assessee purchased another mission in May 19. So, more than 180 days. 1110. Case A, compute depreciation. Case B, if one of the old machine is sold for 710, what is the depreciation? Case C, if all the machines in the opening are sold for 2620, what will be the depreciation? Case D, if all the machines in the opening are sold for 3130, what will be the depreciation? First four cases. First four cases. Up to case D, read it. Follow the format please in your notebook also. Particulars, case A, case B, case C, case D. Follow the same format please. Particulars, case A, case B, case C, case D. Opening WDV, okay, 28 lakh 40,000. Okay, in all the cases it is 28 lakh 40,000. In all the cases it is 28 lakh 40,000. Additions purchased and put to use for more than 180 days, okay, 11 lakh 10,000. Purchased and put to use for less than 180 days nil. There is nothing. There is nothing. Actually, it is 180 days or more. Suppose ஒரு வேகத்தில் எழுதும்போது in a pace I would have written more than 180, but please understand purchase and put to use for 180 days or more. This is okay. So exact 180 also will fall there. Additions, okay. Additions, sale consideration of any asset falling in the block. First, let me concentrate on case 1. Case A, I am concentrating. This is not there. Sale consideration of any asset falling in the block. In case A, it is not there. Balance available for depreciation. Okay. Balance available for depreciation. In case A, I am getting 3,95,000. In case A, I am getting 3,95,000 less depreciation, nothing but because there is no asset which has a lesser depreciation. Everything is more than 15 days. So less depreciation into 15%. As I given that. Okay, please write it. It's machinery, so 15%. Somewhere write and keep 15% in the question. Okay, in exam they will give you in the pace of typing I would have missed, but please write it as 15%. Closing WDV, okay, 3,95,000 minus 592,500. Closing WDV is not the answer. Answer is What is the depreciation? In case B, if one of the old machine is sold for 7,10,000, I have sold the old machine. My sale consideration of a old machine is 7 lakh. Now the balance available is 3,24,000 into 15%. Into 15%, 2754. Do case C and case D. Do case C and case D, please.
Sir,
Raja, is this the answer you are getting?
no, sir, if all the three machines are sold, there must be no
Yeah,
balance for
yeah,
depreciation.
I'm coming to that, Raja. Are you getting these answers? Varsha, are you getting this answer, Varsha?
Yes, sir.
Okay, Varsha, our friend has a question, which is the same question I also have. If
Yeah,
all,
I too had that question, sir.
okay, right. So, yeah,
Hmm.
so fine. So, I know all the three machines are sold. All these three machines are sold. There is only one new machine which is 11,10,000 that is available in the block. All others are sold. But I am claiming depreciation for 1,330,000. When the machine value is just 11,10,000, I am claiming for a higher value. Is it acceptable? The answer is yes. As far as income tax law is concerned, block of asset method. The concept is popularly known as block of asset. Assets of similar nature having same rate of depreciation will be grouped together and depreciation will be claimed on group balance. Depreciation will be claimed on group balance. In this given case, I will not look into how many assets are there in the block. It is a bag. The bag might have 10 missionaries. The bag might even have only one missionary. Okay? I will not look into how many assets are there in the block. So, this is my format and I cannot change my format. Even if it is only one asset which has a lesser value, yes, I can claim for a higher value. Vice versa here. The asset that I have value is 11,10,000, but I am claiming depreciation for 8,20,000. Technically, then case C. Three assets which are there for 28,40,000 is sold for 26,20,000, resulting in a loss of 2,20,000. Nalla purinjunga. Three assets which is valued at 2840 is sold for 2620, resulting in loss of 2,20,000. In income tax law, there is no concept called loss on sale of asset. Three assets which is there for 2840 is sold for 31,30,000, resulting in an income of approximately 2,90,000. In income tax law, there is no concept called profit on sale of asset. You just reduce the sale consideration from the block, and on the balance available, compute depreciation. That's what income tax law says. I don't know how many missions are. It is block of asset concept group. That group might have 1, 10, 100,000, lakh. I'm not bothered. I'm not bothered. Claim on the group balance. Have I clarified, Raja? So yes, this is the answer. Yes, this is the answer. Let us go to case E and case F now. If all the three missions in the opening are sold for 40 lakhs, if all the missions, including the newly purchased one, is sold for 35,30,000. First understand, later you can take it down. Opening balance 2840, asset purchased 1110, and all the machines are sold for 40 lakhs. All the machines are sold for 40 lakhs. Okay. Income tax law now says block is gone. Block is no more there. Sir, I have one mission, sir. I don't look at your books. I am not looking at physically and seeing your block. I am just going by your books. You had a 39,50,000. You sold it for 40 lakhs. Maybe you have not sold all the asset, but block is gone. That's why I asked Bharati to wait. Here we call it as a term called short-term capital gain. In the next chapter only the significance of this you will understand. Okay, in the next chapter only you will understand the significance of this. Okay, as of now you are taking it down as it is. Short-term capital gain 50,000. Short-term capital gain 50,000. Block is gone. In the last case, if all the machines, including the newly purchased machine, is sold for 35 lakh 30,000, block is gone. The bag has become empty. The bag has become empty. At least one machine there, I'll accept. Okay, we call it as short-term capital loss. Okay, short-term capital loss, my dear friends, okay, is 4,20,000. Short-term capital loss is 4,20,000. Short-term capital loss 4,20,000. Please understand. When will a block, wait, I'll give you time, don't worry. Okay, I'm writing the theory so that you are categorically clear. A block ceases to exist, goes out of existence in two circumstances. A block ceases to exist, goes out of existence in two circumstances. If the sale consideration exceeds balance available in the block. Okay, refer case E. If the sale consideration exceeds the balance available in the block, if all the assets in the block are sold, refer case F. Refer case F. The resulting gain or loss is always short term. This you will understand it in the next chapter. Okay, the resulting gain or loss. Okay, I want you to understand only two things. When will a block goes out of existence? Circumstance 1, if the sale consideration exceeds the balance available. Circumstance 2, if all the assets in the block are sold. The resulting gain or loss is always short term. Take up.
சார் அப்போ கேசியில் நெக்ஸ்ட் இயருக்கு அந்த மிஷினரி கணக்கில் வராதுல்ல சார்?
இல்ல, Next year opening WDV will be 1130,500.
Case E, sir.
Case DR.
E.
E opening WDV 0. In both the cases, next year opening WDV 0. You are right. Suppose if I sell it, entire amount will be gain. Opening WDV 0. Even if I sell it for 100 rupees, it is short-term capital gain.
Okay.
Okay, friends. Opening WDV, additions into 2, put to use for 180 days or more, less than 180. So, sale consideration. Here is the point. A block ceases to exist in two circumstances, goes out of existence in two circumstances. If the sale consideration exceeds the balance available, and if all the assets in the block are sold, the resulting gain or loss, this you will understand in the next class, next chapter, which is what is capital gains. I hope the class understands. Question number 2. Opening WDV of computers, okay, friends, 40%, friends. Computers, 40%, 1705. 3 computers were purchased in August. August means it is more than 180 days. And 4 computers in December, less than 180 days. Compute depreciation. Case B, few are sold for 315. What will be the depreciation? Case C, 940. What will be the depreciation? Sold on 31st March. Even if I sell it on 31st March, as our friend Bharti was telling us, that there is no depreciation on sale. I will not look at the date at all. Opening WDV 17 lakh 5,000. In all the cases, 17 lakh 5,000. Additions, purchased and put to use for 180 days or more. 180 days or more, 3 lakh 10,000. Purchased and put to use for less than 180 days. Okay, 3,70,000. Let's concentrate case wise now. Okay, balance available for depreciation. Okay, let's concentrate case wise now. Okay, yes, depreciation, less depreciation. Please understand. Let us concentrate case wise. Okay, the rate of depreciation for computers is 40%. The rate of depreciation for computers is 40%. Now, how I compute? Take your own time in understanding. Okay, 3,70,000 into 20%. Why 20%? Because it is put to use for less than 180 days, half of the eligible depreciation. If it is put to use for less than 180 days, half of the eligible depreciation plus interesting. What is the total amount for which I can claim depreciation? 23,85,000 minus I have already claimed for 3,70,000 into 40%. Repeating, simple calculation I will make, nothing but, okay, 17 lakh 5,000 plus 3 lakh 10,000, this into 40%, and this 3 lakh 70,000 into 20%. So totally I will get a depreciation of 8 lakh 80,000. You can do like this as a working note. I don't mind. Okay, I don't mind. Okay. The other way of nicely understanding this is balance available. For this balance only I can claim depreciation. For this balance only I can claim depreciation. And I know for this asset I should only claim half. So 3,70,000 into 20%, balanced amount. How much is the balance amount? 23,85,000 minus 370 is the balance amount into 40%. I get 8,80,000. I get 8,80,000. Okay, this is one of the finest way of understanding. But if you are confused, I can do a working note and show. Let's see. In this case, sale consideration is if few old computers were sold for 3,15,000. So minus 3,15,000. Okay. So I am getting 20,70,000. 20,70,000. I am computing depreciation again. Please take your time to understand. 3,70,000 into 20%. 20,70,000. That is the balance available minus 3,70,000 into 40%. Okay, 7,54,000. 7,54,000. 7 lakh. So out of 2070, I have already claimed for 370. The balance alone I need to claim. The balance alone I need to claim. That's why I have done this like a formula. That is 370 into 20%, remaining 17 lakhs. That is 2070 minus 370, remaining 17 lakhs into 40%. Similarly, the third case, 9 lakh 40,000. 9 lakh 40,000. So it becomes 14 lakh 45,000. It becomes 14 lakh 45,000. Again, I am working out. I'm not copying. I'm just working out for you to get the grip of it. 20% plus 1445 minus 370 into 40%. 5 lakhs. If you are not understanding, let me know. I will do the working. If you feel no, sir.
So can you show the case A part, the depreciation?
3,70,000. Case A is simple. 3,70,000 into 20%. 23,85,000 minus 370 into 40%.
Okay, sir.
Anybody not understanding, please let me know. Are you confident that you can understand this? I'm really happy.
Can you explain case B again, sir?
Case B, yes, I can explain you. Okay, I will do a working note to explain you how I computed depreciation. I will do a working note for case B first. I will do the working note how I computed depreciation. Okay, less than 180 days. How much is that? I got 3,70,000 into half of the rate, 20%, 74,000, less than 180 days. Then opening balance plus more than 180 days minus sale consideration. Okay, opening balance plus more than 180 days minus sale consideration into 40%. So what did I do? Okay, what did I do? Opening balance, that is 17 lakh 5,000 plus 3 lakh 10,000 minus 3 lakh 15,000 into 40%. So total depreciation 7,54,000. I can do like this also. Or I can say this is nothing but 2070 minus 370 into 40%.
Sir,
Go ahead.
but in the cases where sale consideration will exceed the value, we cannot follow the same method. This working note.
Yeah, I understand your question. I'll come to that part. Her question was, sir, can you follow this working note every time? No, I cannot follow this working note when the sale consideration exceeds these two things. That is, these two things put together 20 lakh 15,000. When the sale consideration exceeds this, she says, I cannot follow this working note, which is correct actually, which is what is correct. Okay. At that time, whatever is the excess, suppose 20 lakh 15,000, I sold it for 20 lakh 20,000. I sold it for 20 lakh 20,000. What will happen is this 370 would have become 365. Okay, but as of now, don't go to that level. I'll slowly take you to that level.
Sir, in such a case, purchased and put to use for more than 180 days will also be sold, sir. அப்போ அது purchase and put to use for less than 180 days குள்ள வந்துரும்ல.
In income tax law, we always assume FIFO.
Okay, they don't care in the assets.
They don't care. Because I believe that you will only sell the old asset. You will not purchase a new asset and sell it. Only FIFO. Question number 3. From the following data, calculate the depreciation admissible to an individual, factory building, plant and machinery opening WDV, additions, deletions, computers opening WDV, additions, furniture fixtures, motor car. Okay, so friends, there are totally 5 blocks. There are totally 5 blocks. Building, plant and machinery, computers, please take it as 40%. Please strike it off. Strike it off, please. Take it as 40%. Okay. Strike it off, please. Take it as 40%. The rate has changed. That's why. Okay. Furniture, fixture. So, building, plant and machinery, computers, furniture, motor car. 5 blocks. So all the 5 will become column. Now, case A, B, C, D by all the 5 will become column, so that you need not again and again write opening WDV, etc. for okay. All the 5 will become column. Use the margin space also if you want, and work out the question very neatly. Very neatly, please. Take your time. These are all the answers. Deepthi, check for your plant and machinery, Deepthi. This is the answer for plant and machinery. 50,000, the total comes to 214,500. 50, 52,500, 84,000, 10,000, 18,000 are the answers. Back to your theory notebook. Back to your theory notebook. Concept of additional depreciation. Concept of additional depreciation. Concept of additional depreciation. Available only for manufacturing entities. Available only for manufacturing entities. Okay, let's continue in the same point. Okay, available only for manufacturing entities, including power generation and biotechnology. These are also known as manufacturing. Okay, available only for manufacturing entities, and the term manufacturing, power is also known as manufacturing. Okay, biotechnology is also known as manufacturing. So, available for manufacturing entities including power generation and biotechnology. Available only for new plant and machinery, including computers. Available only for new plant and machinery, including purchased during the year. Available only for new plant and machinery. Available only for new plant and machinery, including computers. Available only for new plant and machinery, including computers which are purchased during the year. Available only for new plant and machinery, including computers purchased during the year. Available provided the new asset is used directly or indirectly in manufacturing process. Available provided the new asset is used directly or indirectly in the manufacturing process. Available provided the new asset is used directly or indirectly in the manufacturing process. Rate of additional depreciation 20%. Rate of additional depreciation 20%. However, if it is put to use for less than 180 days, 10%. Half of the rate. Rate of additional depreciation 20%. Where it is put to use for less than 180 days, 10%. From the top I am coming again. Additional depreciation is available only for manufacturing entities. Only for assets, new plant and machinery and computers purchased during the year which are used directly or indirectly in the manufacturing process. Computers used in office will not get it. Computers should be used in manufacture, quality checking, mix checking, chemicals processing, like that. Computer should be used in manufacturing, then you claim additional depreciation. Otherwise, this is only for manufacturing sector, not for trading sector, not for professionals, not for service sector. It is only for new plant and machinery, including computers, which are purchased during the year, and it should be used for manufacturing process either directly or indirectly. The rate of additional depreciation is 20%. We all know that if it is put to use for less than 180 days, half of the eligible depreciation, so you can only claim 10%. Full famous case in income tax, forgings. Okay, so very nice case law, stunning it went. Take your time, not copying down, understanding. Forging said, when you say additional depreciation is 20%, just because I am purchasing the asset and putting it into use for less than 180 days, I am getting only 10%. I'm losing the other 10%. You means government. Government promised me that they will give me additional depreciation of 20%. But just because an asset is purchased in the second half of the year, I'm only getting 10%. I'm losing the benefit of another 10%. Income tax department contended, boss, that is the law. Law says, if you purchase and put an asset into use for less than 180 days, you can only claim half of the eligible depreciation. Eligible depreciation was 20%, so you can only claim 10%. That is law, sir. I cannot do anything. So came an case law, Supreme Court judgment, which said, I accept. Law is superior. Law says half. Finance minister in his budget speech said 20%. You would all studied in general classes law about something known as harmonious construction. Two things are said in two different places. Finance minister promised 20% to all associates, manufacturing entities. Law says if you buy the asset and put to use for less than 180 days, half of the eligible, so 10%. So law, what is as 10%? Finance ministry has said 20. Finance minister has said 20%. Try to link between them. So what the court said is, where the assessee is claiming 10% in the first year. When will assessee claim 10%? If he buys the asset in the second half of the year. So the law says, where the assessee is buying or is claiming only 10% in the first year, the balance 10% can be claimed in the immediate subsequent year. Now, law, I will fulfill law also. I will fulfill finance minister's words also. Okay. So, the law, which is now a law itself, where only 10% is claimed in the year of purchase because I have put to use it for less than 180 days. Then the balance 10% can be claimed in the immediate succeeding year. where only 10% harmonious construction, where only 10% is claimed in year 1, the balance 10% can be claimed in the immediate succeeding, in the next year itself, so that both the finance minister's words of 20% is also fulfilled. At the same time, law is not getting violated.
சார் அப்போ சக்சீடிங் இயர்ல 30% இருக்குமா சார்? அப்போ சக்சீடிங் இயர்ல 30% depreciation
10% only. I cannot claim additional depreciation in the second year, in the succeeding year. Available only for new plant and machinery purchased during the year. So that is not purchased in that year. So I cannot claim that 20%. I can only claim the balance 10%. Totally additional depreciation is only 20%. So friends, to complete the additional depreciation theory, only for manufacturing entities, plant and machinery including computers used in the manufacturing process, directly or indirectly in the manufacturing process, which are new asset purchased during the year, you can claim 20% for additional depreciation. Where in year 1 you are claiming only 10% since it is purchased in the second half. The balance 10% can be claimed in the immediate succeeding year.
சார் எனிவே இந்த வருஷம் கிளைம் பண்ணல டிப்ரிசியேஷன்னா அடுத்த வருஷம் நிறைய கிளைம் ஆகும்ல சார்? எதுக்கு சார் இப்படி கேஸ்லாம் போட்டு இந்த வருஷம் வாங்கியிருக்காங்க?
எப்படி ராஜா கிளைம் ஆகும்? ராஜா
இந்த கிளைம் பண்ணல 10%னா
இந்த வருஷம் I can claim 15% plus 20% ராஜா. I can claim 15 plus 20, 35%. I have only claimed 7.5% and 10% Raja. 17.5% only I can claim. I have claimed. This 15% is going to continue every year because that is also available for opening balance. No problem. Ana in the 20% is lost. That I can claim only in 1 year.
That 20% is lost, sir. But on the 15% கான cost அதிகமா இருக்கும்ல. Like if that 15% is totally இது பண்ணா return on value கம்மி ஆயிடும்.
But exactly under diminishing balance method, the year in which it will be offset is 7th or 8th year. What I could have claimed in first or second year. You are right,
yes.
Sir. Anyhow, that 15% amount will be more. But under diminishing balance method, the year in which I get the benefit will not be the first or the second year, it will be the 7th or 8th year. By that time, the machinery would have fallen into pieces. That's why they give this benefit. I'll come to question 3A. It's a small amendment. Nothing very important and all. Don't worry. I'll come to 3A later. First, let me look into question number 4. X Limited, a company engaged in manufacture of garments. X Limited, a company engaged in, whenever you read the word manufacture, okay, you should remember additional depreciation. Okay, I will keep adding whenever you read the word manufacture. What are all things you should remember? We will see it later. Manufacture has a lot of benefits. Okay, that is our Prime Minister's scheme, Make in India. That is the scheme for which actually these are given long back itself, not now. But generally, for making in India, they will give you this benefit. X Limited, a company engaged in manufacture of garments, had 315 opening WDV. On 7th May, machinery belonging to the same block worth 110 and 19th January 84,000 purchased. Opening WDV of computers 120. Okay, friends, computers 40% you all know. During the year, the company had purchased the two computers, June and September, 76 and 32. First computer is used, friends, only one computer. First computer is used to facilitate manufacturing process and the second in office. Company sold one old computer for 12,000. Opening WDV of furniture 26,000, purchased in July furniture 18,000 for factory and 12,000 for office in August. Compute eligible depreciation. Read through. Let's together do opening WDV. Okay. 3,15,000 for plant and machinery. Computers 1,20,000 and furniture 26,000. Additions purchased, put to use for 180 days or more. Plant and machinery. Okay, 7th May, I have purchased a plant and machinery for 1,10,000. Both the computers were purchased before time. 76,000 plus 32,000. And both the furnitures are purchased well within the time, July and August. So 18,000 plus 12,000 purchased and put to use for less than 180 days. Okay, is only 84,000. Deletions. Sale consideration of asset falling in the block 12,000. Depreciation, both normal and additional. Both normal and additional. Both normal and additional. Ramkumar, for plant and machinery, tell me the normal depreciation.
Sir, balance available
No, do amount.
Okay. Seven double
70050. Let us check, my dear friends. Okay, 84,000 into 7.5% plus 5,09,000 minus 84,000 into 15%. 70050. 70050. Bharti, tell me for computers.
So 86,400.
86,400. Okay, let's check our friends. Okay, there is no second purchase asset, so directly into 40%. 86,400. There is no less than 180 days asset, so 86,400. And for here also there is no second purchased asset into 10%. 5,600. 5,600. Additional depreciation 20% if it is more than 180 days. 180 less than 180 day, 180 or more, 28%. Less than that, 10%. That's it. What is the answer for plant and machinery? What is the additional depreciation for plant and machinery?
Once. So 22,840.
22,840. Friends, let's check. 1,10,000 into 20% plus 84,000 into 10%. Okay, 1,10,000. 1,10,000 into additional depreciation is only for assets purchased during the year, and it is not for opening balance, never for opening balance. If it is purchased and put to use for 180 days or more, 20%. Less than 180 days, 10%. So 30,400 for plant and machinery. Sanjay, can I know for computers?
Sir, I have a doubt in that computers. One part of the computer is used for factory, so that we should calculate only for that computer, no, sir.
Can I have the answer for computer?
Yes, sir.
Yeah.
$15,200, sir.
It is As he was asking, it is right, 76,000 into 20%. If you use it for office, you will not get. Only which is used in the manufacturing process will get. So 15,200. 15,200. Varsha, can I know for furniture?
1 minute, sir.
Yeah.
Is it 6,000, sir?
It is
6,000?
Can you check it again?
Okay, sir.
Aishwarya, do you have a different answer? She's saying 6,000.
3,600.
3,600. 3,600. Siana, do you have a different answer? Our friends have 6,000 and 3,600.
Sir, I think depreciation will not come.
That's the answer. That's beautiful. Depreciation will not come. That is the finest answer I was looking for. Friends, additional depreciation is only for plant and machinery, including computer. It is not for furniture. It is not for intangible. It is not for building. It is only for plant and machinery, including computers. So additional depreciation will not come. Okay, so closing WDV. Okay. Please write and keep everything. I'll also write, don't worry. But generally I'm saying. These are the two notes.
Sir,
Yeah, go ahead, Bharti.
so generally how do they compute depreciation? Month-wise or as per the income tax?
As per the income tax law. I mean, you say for paying taxes, right? Or you are asking in books of
So
accounts? Huh?
in both it will be common only, no,
No,
sir?
it will not be common. It will not be common. I'll teach you that. What happens, I'll teach you. Practically, you will see it also, but I'll teach you. Question number 5. A company engaged in manufacture, okay, so you will get the benefit, had 4265 on 1st April, purchased a new machinery for manufacturing process in December. In June, company had purchased another machinery pertaining to the same batch 1185, and in January 1890. Compute the eligible additional depreciation, normal and additional, for previous year 1920. 1 minute, friends. 1 minute. 1 minute. A company okay, had purchased 4265 opening. Company purchased a new machinery for manufacturing process in December 18, my dear friends. This is not 19. The mistake I understand. Okay, I will correct it also. December 18 for 22 lakh 85. Why this information is given is, last year, that is in 1819, for this machinery they would have claimed only 10%. This is not 19, please change it to 18. Last year for this machinery they would have claimed only 10% additional depreciation. This year in 1920 we need to claim another 10%. Obviously this is part of this opening balance, don't worry. For claim of additional depreciation, I will take this amount also. In the current year, June I purchased 1185 and January 1890. Compute the normal and additional depreciation for 1920. Go ahead, my dear friends. I'm going to the answers, friends. Almost many of you have correctly done it. For those who are struggling a bit, okay, the addition, many of you have done your, all of you have done your normal correct. 90% has done additional correct. Additional depreciation works like this: 11,85,000 into 20% plus 18,90,000 into 10% plus 22,80,000 into 10%. Repeating, 11,85,000 into 20% plus 18,90,000 into 10% plus last year December 18 I have purchased an asset for 2280, for which I would have claimed an additional depreciation of 10% only last year. Now I can claim the balance 10%, taking my total depreciation to 1613,250. Friends, back to your theory for one particular note which I just missed out. Friends. Back to your theory for one particular note, please. Okay. Where the manufacturing unit is located in the notified areas of the state of Bihar, West Bengal, Andhra Pradesh and Telangana. Where the manufacturing unit is located in the notified areas of the state of Bihar, West Bengal, Andhra Pradesh and Telangana, additional depreciation is 35% instead of 20%. Additional depreciation is 35% instead of where the manufacturing unit is located in the notified areas of the state of Bihar, West Bengal, Andhra Pradesh and Telangana. In these 4 states, the rate of additional depreciation will not be 20%, it is 35%. So if I put to use for less than 180 days, 17.5%. If I put to use for less than 180 days, 17.5%, balance 17.5%, you can claim it in the next year. Balance 17.5. So instead of 20 and 10, it will be 35 and 17.5, and the balance can be claimed in the next year. Balance can be claimed in the next year. That is the provision. So if the same is in Andhra in these 4 states, this will not be 20%, it will be 35%. It will be 35%.